Alright, sorry about that, guys. Alrighty. So, if you don't know, I am a 12-year-old stock options and futures trader. That's pretty much what I do as my professional career at such a young age. I trade stocks, options, everything under the sun. Sorry, I was just checking a trade that went through a little while ago. So, I don't usually directly talk about what my personal positions are. So we might as well get to that. If you're very interested, I'm short the market, long a bunch of gold stocks, long commodities. So here's my positions. Long Apple, long BlackBerry, short agriculture, long a tiny bit of emerging markets through like an iron condor. Long just a tiny bit, another iron condor in Mexico ETF, short Brazil, a little tiny long Facebook, little tiny long FXI, long the yen, which is inherently short the market apparently. Iron Condor in Hewlett Packard, short IWM, long JCPenney, long Microsoft, long Potash, short the Qs, long SLW, which is a silver stock. So again, that's basically my position. Again, in silver, short the SPY. I'm short 13 shares of stock as well as an options trade. Long the market through my short bond position, but that's kind of iffy considering more of the shorter term correlation. Then short natural gas, short oil, short XRT, which is retail, long energy, and long utilities, and short Yahoo. So those are my positions. Thank God I'm getting lots of theta from those positions. Theta, if you guys don't know, if anybody doesn't know, what theta is time decay. So it's a measurement of your time decay. So if you have $11 in theta, it means you're getting $11 a day in time decay. And then delta, of course, and we'll talk about the Greeks. Delta is how much money you can make or lose if a stock moves $1, theoretically. And then there's something called delta neutral trading, where you don't take delta risk and you try to just collect theta. Then there's gamma, which is your change in delta or a $1 change in stock price. And then you have vega, which is your change, how your portfolio will react to a 1% change in volatility. That's just for, if you don't know, FYI, that's just if you don't know what those are. So I just want to let you guys know, and just to make sure everybody understands, 1 second here, we're having an issue. And yes. So as for the S&Ps, today was actually kind of interesting trading. Let me switch over on a short-term chart. I'll show you. Okay, so what you're doing is you're looking at a chart of the S&P futures, and you can see we're down, but here's the thing, and I'll switch this chart to a candle, is we closed near the low of the day, and I'll show you this. So we gapped up on the SPY, we fell back down quite hard, so of course I'm short the indexes and hopefully long gold. Hopefully that position works out. Hopefully. I'm also long silver, a little long euro, and stuff like that. And I'm looking at the ETFs because the market's already open in some of the other places. And since the markets are already open in some of the other places, you're getting weird data. Gold was down 1.07% today, which is actually no big deal to me. It didn't hurt me that bad. The thing that did hurt me was my Apple trade. Apple was down 3% today, and I'm long just a little bit of Apple. Doesn't seem like it's giving me any theta from that position, though, which is kind of interesting, and I'll have to pay a little bit of attention to that, considering. But the long apples were basically what was hurting me. I closed my gold shorts, anything that I had in. I'm long potash, except I'm short agriculture commodities, and I'm just showing you these things. But again, you have you have the S&P kind of closing on slow, so bearish tape action, but who knows what it's going to do coming in here. It might gap up tomorrow. Like, again, this looked pretty darn bearish also, but, you know, we went up, bearish, went up, bearish, this kind of thing. So who knows, really? I have no idea. At this point, lots of uncertainty. Who knows? Some options traders are crying again because they're short. And I'm actually a little bit long, but I'm careful. I like my oil shorts for sure. I think the Situation series overplayed, whatever. I don't care. I just think it's overplayed. Put on a trade, fit my portfolio. That works well also. And I'm doing it through several different options involved in the market. But I just think that whole situation is overplayed. All of that. So then... Oh, sorry about that. Looking forward to yen and euro. So yen, I like the yen as kind of some of the long trades on the long side. A little bullish to the yen, that's all. No specific reason. I just think, you know, the Japanese markets have a lot of downside and not a whole lot going on there, though. But it's just another trade that fits my portfolio. I think it's bullish tape action. We've seen kind of rangy action. We might just continue to pop up right here. We may see some interest in that. It might be something interesting. But who really knows about what's actually going to happen? We really don't know. So, I just think yen's going to go up, continue to... you know, short-term highs, continue to make short-term highs right in here. Maybe even if we get past this level, I'm not so interested in the yen. But again, it's just an interesting trade you can take some profits on. Again, options trades. I'm doing mostly options trades. So these primarily are options trades. Again, sorry about that. Microphone issues, different things, weird stuff going on. Yes. So that was my general position in there. I did 8 trades today, so lots of different things. I closed my Canada shorts, by the way, which I talked about on the show. I was a little bit short Canada. I don't care for that position much more, so I closed out the shorts. That's just another major market. I closed out my euro longs also for a small profit in here. The euro, I just thought might continue to go up quickly. Euro is more of a short, so that stock is on my short list amongst my many other positions. If I look here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. So 23 positions, and I might have miscounted in there. So maybe, give or take, between 20 and 22 positions. And that's basically the idea. Now, I'm going to close some positions, of course, tomorrow. There's some positions worth closing in here that I'm on. I think I'm going to actually close my yen. My yen position is going to go away. I'm going to get out of that. And it's been an interesting trade going in, but again, it's not a position I really need anymore, so I will scratch the yen off my list. Again, you know, once you start getting to around half max profit in options trade, there's no point to keep the trade on because the market could so easily go the wrong direction and get you kind of not in such a good place with an options trade that was immediately fine. So that is something that I'm definitely paying attention to, is you need to manage winners. Now, people say make your profits big, your losses small. The difference is if you have a high probability of success, manage your winners and be mechanical. If the market gives you something, take the trade off. Now, if you think it still has room, that's fine, but stay mechanical with your trading. I really do want to emphasize that. Alright, so I kind of gave you an idea of my positions, and I talked about mechanical trading just a little bit. So, I think, I'm just trying to think. Alright, so I want to go through a couple more major markets, and I'll switch over to the other screen here. I'll just switch over quickly. Let's go over here. Let's go over here to soybeans. I got short soybeans and short corn. I am short corn. I am short. Well, corn I like corn versus the others, so that's why I'm long potash, which is also up, but again, I do like it. I think maybe potash is soybeans, but again, I don't like some of these other agriculture. Corn might shoot up a little bit if we've seen kind of a negative correlation in the product. But soybeans, I'm short. Again, I'm short agricultures through DBA, just a small little position, keeping it on shorting agriculture because, again, I think we may see continued fear. We've been in this huge trend to the downside, and looks like we're getting some movement in there. Then ideas gold is we may see some further fear in the stock market, so I'm kind of getting along gold. It's kind of an interesting trade. I'm hoping for gold to go up. I don't really feel comfortable in this trade quite, but again, it looks decently interesting. We haven't seen a lot of volatility to the downside, and this is just today. This is my first trade today. As for the last thing I'm going to look at, and this is not a major market, but is Tesla. People hate this stock, let me tell you. People hate Tesla more than anything. It does nothing but go up, and I warn people, don't get short crap like this. Don't get short stuff that's parabolic all the time. It doesn't make sense because you end up fighting something that you don't want to fight. I hate the stock Tesla also because I'll show you why. I got short on this day, right here, and it'll pop up in a second on the chart. I'm not sure why it's not loading. But I got short on this day, alright? But the stock shot up like intraday or something, and then I covered my position. I was just looking at intraday. I covered my position, and what do you know? Stock is down 10% the next day. I hate Tesla. But as for options traders, be warned. This stock does not follow implied volatility. Be extremely careful. That's just a warning signal for anybody else who wants to get out and touch Tesla. My people at Tasty Trade, considering great options trading show, by the way, and this is not them promoting themselves. It's me wanting to promote them. Great options trading show, but my friends at Tasty Trade, Tom, great trader, yeah, he hates the stock. Let's just put it that way. It has been painful for him and many other people. Please stay away if you're an options trader. And that's my warning of the day. So I'm gonna go on a quick break, and we'll be back in 2 minutes. Welcome back to Strategic Trading Radio Live. I am Alex, and I am a 12-year-old stock and options trader for those new to the show right now. And so this is a segment where we get into some different trades. I have specifically looked into different options, strategies, things like that. And let me just get this up for you. So another interesting thing about this segment is we don't look at charts because I don't think it should matter. Your directional bias should not matter. It's the strategy you pick, reducing cost bases, etc., etc., etc. So don't worry about the direction. You can follow my direction. My direction is as good as any analysis, any direction. People who are good at trading are not good at technical analysis. They're not good at fundamental analysis. They're not good at hocus pocus Joe analysis either. They are good at trading mechanics. They're good at mechanically managing their trades. They pay attention to their trades. You see, I have a list right here of things I have going on. It's not all my trades, but it's a few, and I guess you can't really see it, but anyway, they pay attention, they trade mechanically, they take what the market gives them, and they manage their portfolios. They don't worry, they don't micromanage stocks. The best traders I've seen, they don't micromanage positions. They may be very active traders. They may have 20, 30 positions on. They may be trading 1,000 times a month. I don't know, maybe 400, 500, maybe 10. But they're mechanical, they don't micromanage their positions, and that's what makes them good traders. Like, for example, I have this position in TLT. I'm still, it's been doing quite well, so I covered the position. But what I did do is I said, okay, well, I need something better to fit my portfolio. I need some more risk on. I need a little more theta. So what can I do? And I'm looking through all these stocks, and then I go back to the bond market. Oh, well, they still have pretty high IV percentile. Now, the actual bond ETF for where most of the options trading will happen for my viewers is in the 48th percentile, but the bond futures market is in the 69th percentile, and I thought, okay, well, there's a major difference there, so that's something that I should pay attention to, and I based my trade simply off that. So, okay, I'm already short bonds. I don't like bonds. Interest rates are rising in this kind of trading environment, and that's kind of what I'm looking at. So I just continue to short some bonds, going with the trend, and that would be the general idea. And that's just the trade. I don't have any big opinion bonds. It's not like I have a macro thesis on it. I'm just good with the mechanics on it. Or, when I say good, I mean I'm trying to be good. I do my best. But again, I'm here to provide some content. So, let's go ahead and look at FXY, that yen trade I have on. Oh, no. We have a nasty chart up. We can't have charts up. Why do we need charts? Forget the chart. There we go. Something much more pretty. A trade tab. I'm sure you all enjoy my trade tab much more. Alrighty then. So, we're looking at Facebook. That's not what we need. Boom. I am bullish. I think yen is a little bit oversold. I kind of like the position. Blah, 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 blah. Who cares? Now, let's take a look at this. Okay, so, this is paper money, so everything's not always right. So, we're in the 46th percentile, not the 31st as it says on the screen. So, you know what we're going to do? We're going to go over here. We are going to select 14 strikes. We are going to go to, yes, this. My screen is a little bit messed up. So, I'm going to customize it, and you might as well see. I'm going to get rid of this. I'm going to get rid of this. And I'm going to add return on capital, which is your return on capital for a naked put option. Return on capital. Boom. There you go. There's my return on capital. So, alright. So, we have decent implied volatility, 6 percentile. So I guess there's some interest around that number. And actually, there's one thing. Just a second. There's one thing I need to do. I'm gonna buy back some stock. Just a second. I need to do a trade here. 13. Buy back some stock. And then I should be filled in a second. Just something I need to do is an options trade. But going back. Alright, so what you could do, you can't sell an iron condor or any kind of skewed iron condor. You can't do that because the volatility is too low. You can't I'm not sure about selling put spread. It may make sense, but it may not. That's the thing. So here let's just see how much we can get for selling the option spread. So sell deep and wide, right? Sell deep and wide 1 month. Now it depends. If we want to do a premium play, you have to go more like 3 strikes, right? So let's try the 3 strike spread. Sell vertical 3 strikes. Okay, so you get 10 contracts, and let's lower this down to 1. Alright, and then you have your max loss is 180 and your max profit is 120. I don't think that's enough personally, so I'm going to go out a little farther. Deep and wide, sell, deep and wide, sell deep and wide, 1 month, 3 strike, vertical spread, 87 cents, max losses, okay, so it's $210. I'm going to do that trade. You have a probability of success wrapped around 70%. It's an interesting trade. So that is what I will be looking at in that kind of thing, and that's simply how I would set up the trade. Otherwise, I don't really look at much. That is simply what I look at. That's it. That's all. That is what I look at. So, for moving forward, I am just checking out different things to do in the markets. I have to trade too. I'm just looking at different trades, different possibilities, different markets. Let me know if anybody has an opinion on JP Morgan Chase, by the way. Yes, just let me know. Because I am kind of interested. So you can send me an email, alex.optionstrading@gmail.com. Gmail. Okay, moving on. I guess that's just going to have to be the trade in FXY. Moving on to potash. Potash! Yay! I'm going to show you because not everybody follows this stock. This is where we're trading at. So I'm still bullish in this stock. Alright. So if I'm bullish in the stock, let's check the IV percentile. So I can't show it up on my screen because that's paper money. It's not always accurate, but I will tell you. 60% iron condor or short put trade. I'm short puts in there because I need long delta, whatever. However, for you guys, I think it might make ample sense to sell an iron condor, especially if you have lots of directional bias in the market. So I'll show you how I'm set up. So since we're a little bit bullish, let's do it like this. Let's sell the 66 probability. Then we're selling the 31, 66 probability. We're buying the 29s. So we have a vertical spread in. And then we're going out here. We're going to sell this. And we're going to buy this. 60 cents, max loss, $1,400 because this is 10 contracts. Delete. Go to 1. Boom. Max profit is 60 cents. You have a probability of success right around, eeny, meeny, miny, mo, about 70%. That's pretty good. I like that. I like those odds, don't you? I like having a probability of success right around 70%. Iron Condor again, so if the market moves one direction or another, it kind of can not be so good. But I will show you how this trade is set up. Analyze deeper. This is an analyze tab, so it just kind of shows you what it is. Our risk is if the stock goes down. Our reward is if the stock stays around flat, and we lose less money if the stock goes up. So we've kind of eliminated most of our risk to this side. Now, if we were to get wider with the put strikes, we could get even wider and eliminate more of the risk here. And there's different things we could do involved here, but it has to increase your premiums. So, for example, what you could do is you could customize this order, and then you could sell 2 on this side, and you get something more like that. Sell 2 on the put side, and this is kind of what you get. And then, of course, we'll have to back it up. So I'm showing you, you can decrease your risk even farther compared to this side, and etc. So that's just kind of what I want to show you in that sense, and that's another stock. So next, SPY, nothing special. I'll just show you what I did real quickly. I want a bearish spread, but the implied volatility is kind of crappy. So what you do is you could do a bearish put diagonal. So what I did is I bought this option. I bought the 171 November puts, and I sold the 69s. And then you have this kind of diagonal spread that gives you some bearish edge, also more non-directional. It's a theta, it's a time decay spread, and it's actually a rather interesting position. And that is one thing you could definitely look into also. Moving forward, apparently I have just a few more stocks on here. Let's take a look at Facebook. So Facebook was down a little bit today compared to itself, down 4%. So it's like, oh, well, okay, so the implied volatility is supposed to be a little low. So I thought, okay, so there's not a whole lot I can do in here. So, but I'm still bullish in the stock, a little bit bullish. So what I did, very simple, you hit control, by the way, if you want to set this up, is I'm buying this, I'm selling this. 103 cent dividend. I paid 104, so I'm down $1 on the trade. But max loss $103 if you do a one lot. Max profit $97. 51.5 probability of success, right around 50%. So it's a stock substitution, but there's not a whole lot else you can do. You can't sell much premium. If you wish to know if the trade offers positive theta, my trade offered, if you do a one lot, it's 0.17 in positive theta, so 17 cents. That's okay. In positive theta decay, and that's actually pretty good. That's okay. Positive 17 cents, and at least it's not negative, because some debit spreads have negative time decay built into them, and that can be a real issue. So I talked about TLT, because I talked about FXY, I talked about my Apple position, just a put spread, no big deal, nobody even cares. But last one I'm looking at is silver and different gold things. So I did SLW, and that's the trade I have in, and I'll tell you what I have. I have the 24.19 put spread. It's almost like a short put vertical, essentially short puts. I have a ton of vertical spreads in. My other main position, I have a diagonal, I have an Iron Condor in, and those are pretty much the spreads I'm using right now. But main majority in vertical spreads, because the markets act so directional right now that's just kind of what you have to do. I have a diagonal. I have a diagonal in the SPY, diagonal in Qs. Then you have a Iron Condor and EWW, and then this thing is grouping weird, but an Iron Condor in Hewlett Packard, and it's just messing with things a little weirdly. So, but mostly verticals because of the way the market is trading, just the low volatility. So last stock, GDX or SLW. I might as well take a look at GDX for you. Yeah, so GDX is in the 77th percentile, and SLW is somewhere around that too, 71st. So GDX is the better trade. I'm not always perfect, but I kind of like I just liked SLW a little better. Okay, so I'm long, but I want to show you guys another premium play because the vol is so freaking high. So what I'm doing is I'm going to the 63% out of the money puts. Alright, and I'm pressing Control, click on the bid. You're selling that put. And then you're going to the 24s, right? So we're buying the 22s, and that's a vertical. And then what we're doing is we're going to the 65 expiry over here is fine, and then we're selling this. We are selling the 65% out of the money, which right here is 26, and we're going to buy the 27. So 26 sell, Control click, and then go to that, Control click, 28, 86-cent credit, high probability of success. So you know what? I don't like the call strikes as much, so I'm going to widen it out because there's more room to go. And I'm actually going to move it here to 26. I meant to do it to 26. But yeah, so we're going to go all the way to 27. And then we're doing the 28. So 69 cent. You have about right around the 1 standard deviation. So say you want even a higher probability of success than that. So now we're going to go back over to the put side, and we're shorting the 24s. Let's do the 23.5, and then let's do the 23.5 is what we have. So let's do the 21.5. Okay, that's right about 69%, right around the standard deviation. You make money until the stock goes up here, and you lose until it goes to 27.61. So the stock can fall $3 or move up $3. You're good. And again, it's a little bit of skew to the upside. So I hope everybody enjoyed this segment in the show. Again, if you want to send a comment or say anything, it's strategictradingradio@gmail.com, also, or alex.optionstrading@gmail.com if you want to email directly. I hope you enjoyed the show, and thank you for listening. We should be back on live Friday. No promises because I'm not sure if everything's going to work out, but I'm pretty sure Friday. Thank you for listening.